The CNBC app. Global market news in one place. Customizable sections and personalized alerts. Stocks tracking, interactive charts and market insights all in your hands. Stay connected. Stay informed. Download the CNBC app today.
Welcome to Squawk Box Europe. I'm Karen Cho with Steve Sedgwick and Ben Boulos. These are your headlines. President Trump hits pause on Project Freedom, citing progress on a possible Iran deal, while Secretary of State Marco Rubio says the focus is now on reopening the strait, not military action.
They play games, but let me just tell you, they want to make a deal. And who wouldn't?
The Operation Epic Fury is concluded. We achieved the objectives of that operation.
Hopes of a lasting ceasefire deal lift equity markets across the board, but it's South Korea's KOSPI. Oh my goodness, that is a massive outperformer. Look at that. One session so far, 7%, smashing through the 7,000 mark. As you guessed it, the prop for the market, AI and chips rally. That rally taking off once again.
Elsewhere, Novo Nordisk moving higher ahead of the open after hiking its guidance. Sales of the new Wegovy pill come in more than £1 billion Danish kroner ahead of expectations. We'll hear from CEO Mike Duster later this hour.
What operation are we on at the moment? Is it still Epic Confusion? Epic Fury? Project Freedom lasted, 12 hours? This is bemusing. And when the president is saying the Iranians are playing games, with respect, sir, it looks like it's two who are tangoing as well. But thank goodness the market still believes in the AI story. It still believes in Samsung. It still believes in Micron. It still believes in Nvidia. Because if it didn't, where on earth would we be?
Well, it's not Epic Fury, because if it was still Fury, that would unlock the fury of Congress at this point.
Boom.
Because they need some sort of legislative approval. And when it comes to Project Freedom, well, nothing has actually been freed physically when it comes to the oil markets. So maybe one ship, but we haven't really had any physical goods coming through that should move the needle on the oil price, which is actually declining.
No, I'm just still intrigued. This is what I ask the guests every day: is how can we see these rallies that we've seen and the KOSPI and these economies that are so energy import dependent still in the face of the confusion? And remember, oil is still above $100 a barrel this morning. There's this relief and this optimism, but how long does it last?
Well, you just have to look at every single analyst who is looking at refined products, whether it's jet fuel, whether it's gasoline, you name it as well. Reserves are diminishing aggressively. Supplies are not getting to market. There is a crunch happening within the next few weeks in all kinds of products globally as well, including fertilizer and other things as well, that if this isn't solved in the next few weeks, then there could be, I think it's fair to say, some real economic hardship.
Yeah, problems for the semiconductor market as well. We've been talking about this week, and to your point around AI, up more than 3% on the VanEck Semiconductor Index yesterday. Now, let's circle back to the main events as US President Donald Trump has paused Washington's efforts to guide ships out of the Strait of Hormuz, citing in part great progress made towards a deal with Iran. Trump said a US blockade of Iranian ports will remain in place. Now, WTI Brent this morning, both have been reversing. We saw that yesterday, a big pullback in session, and Brent this morning down another 2% along with WTI. Speaking before the announcement, Trump said Iran is playing games but wants to make a deal.
We have a situation where we have total control. As you know, the blockade's been amazing. It's like a piece of steel. Nobody's going to challenge the blockade. And I think it's working out very well. We're going to see. I can say this: Iran wants to make a deal. What I don't like about Iran is they'll talk to me with such great respect, and then they'll go on television. They'll say, "We did not speak to the president. We did not." I just spoke to. We did not speak to the president. So they play games. But let me just tell you, they want to make a deal, and who wouldn't?
Let's get out to Dan for more. Dan, we've still got the blockade of the blockade, no product really getting through. So what does it mean in terms of how markets really need to be thinking about the oil price that seems to be in retreat?
Good morning to you all. Well, as you've heard there, the US is signaling a potential shift towards de-escalation in the Gulf, even as we see tensions with Iran continuing to test this very fragile ceasefire. President Trump saying that he is pausing Project Freedom, the US operation escorting commercial ships through the Strait of Hormuz, citing what he called great progress towards a possible agreement with Tehran. However, of course, the US blockade of Iranian ports will remain in place. And on the ground, tensions are still very high. The UAE saying its air defenses intercepted new attacks from Iran, while Tehran also warned of a crushing response if its interests are targeted from Emirati territory. What we're also clearly hearing now is US officials essentially trying to strike a balance here, talking up diplomacy while also maintaining pressure. Here's the Secretary of State, Marco Rubio.
Operation Epic Fury is concluded. We achieved the objectives of that operation. I'm not going to, we're not cheering for an additional situation to occur. We would prefer the path of peace. What the president would prefer is a deal. He would prefer to sit down, work out a memorandum of understanding for future negotiations that touches on all the key topics that have to be addressed, a full opening of the strait so the world can get back to normal. That's the route he prefers. That is so far not the route that Iran has chosen.
Marco Rubio there, and the message really underscores this current moment. Washington signaling that it wants a deal and a reopening of the Strait of Hormuz, but also making clear that Iran has yet to move in that direction. And of course, we've also heard from Iran's foreign minister, who is now in Beijing for talks with China, just days ahead of President Trump's upcoming visit, adding a diplomatic track to what remains a pretty volatile situation still. And then, of course, for markets attempting to price all of this, the signal is still really mixed right now as well. We have this pause in US escort operations pointing to potential progress, but then, of course, the blockade still in place and threats to shipping continuing. The risk premium around energy and global trade remains firmly in focus here. So as a result, prices are staying elevated, but we have seen some give back over the last 2 days here. Perhaps traders taking profits, or perhaps this market now starting to signal that a diplomatic off-ramp could be emerging despite what we're hearing from both sides.
Dan, I know I've got to move on, but I've just got to say the following. I have to get it off my chest if I don't. And I'm just asking the question for all of you. To Secretary Rubio, sir, how have you achieved all of your epic fury aims? 1, we don't have a change of leadership, which talked about earlier on. By the way, thanks, Dan. 2, they're still firing missiles at Fujairah, at the UAE, hitting infrastructure. 3, the Straits of Hormuz are closed. 139 ships a day are not getting through. 4, well, where's the clarity on the nuclear aspirations of the Iranians? So with respect to everybody out there, and again, I'm not trying to take a view, I'm just saying, how has Epic Fury achieved its goals? The world's suffering from this opacity, this fog. But luckily, earnings are ongoing and we do get clarity from companies. So I'm going to talk to you now about this massive day here in Europe. Let's run through some numbers. Lufthansa, which is one of the companies right in the epicenter at the moment, of course. They've been cutting flights more than anyone in Europe, I think. Out with numbers this morning, Lufthansa reporting better than expected first quarter results. Wow. And maintaining its outlook for the full year after strategic hedging helped offset rising jet fuel costs. The German carrier said it expects to spend an additional 1.7 billion euros to cover surging fuel costs, but said it was in a good place to mitigate the negative knock-on effect. OK, let's move on. BMW pre-tax earnings fell by 25% in the first quarter. The car maker, however, still beat estimates despite tariff pressures and a difficult market situation in China, or dare I say, a difficult market situation in Europe because of China. There you go. And Novo Nordisk slightly raised its guidance for the year after posting a beat on first quarter revenue and adjusted operating profit. We're going to hear from the CEO, Mike Dustar, who I believe is speaking to our very own Charlotte later this hour. But here's a company that had a whole host of crises before this crisis. But how is Diageo getting on?
It is a mixed commentary report today. So there's some positives, and that comes in the form of the Q3 organic net sales up 0.3%. The market was somewhat cautious about a retreat here. Volume up 0.4%. The price mix, though, down 0.1%. And when I say mixed lines here, North America remains our biggest challenge, and that's been where some of the issues have been. America and also with China. In terms of the sales line, though, that has been a slight beat, $4.48 billion. versus the 4.27 billion that the market saw for the net sales figure in the third quarter. So again, this is how mixed it is in terms of the delivery of some of that. But the fiscal 26 guidance has been reiterated. When they say the North American market remains the biggest challenge, where market conditions are soft and our offer needs to be more competitive, actions are already underway to address challenges in North America. They're mindful of geopolitical uncertainty, including the impact of ongoing conflict in the Middle East, and also accelerating a program that is on track to deliver $300 million in savings by the end of fiscal 26. But just recall where we're at. The company's been trying to ramp up some supply when it comes to Guinness. It's focused on canned cocktails. You know, you pop and pour effectively on the cocktails. None of that shaking and mixing. I can see your face. But it's also been trying to reorganize itself in a marketplace where there's been some consolidation. We've been talking at length about other drinks businesses that have been looking to sell to rivals when previously there may have not been a for sale sign up. Some believe that may give Diageo the firepower and some breathing space here if rivals are not champing at the bit on consolidation around them.
Unfortunately, mine are older than yours, which means I know what late teens to late 20s are drinking. Yes. Do you know what they're drinking? And this is where probably the CEOs... Go on.
Is it the Buzzballs?
It's Buzzballs.
Ah,
they are
so
drinking Buzzballs. Yeah, you do get 10. Buzzballs is what I've just got on here, and they are balls of canned cocktails, and they have caught the.
You see them on the subway, on the tube here all the time. People drinking them on their way to a night out.
Well, they shouldn't be, because you're not allowed to drink on the subway.
I know they're not.
Berate them suitably. No, I bet you don't. Don't get involved. Don't get involved. Leave them be. But that's exactly it. It's a kind of like, it's like craft beer all over again. Do you remember when craft beer was so hot? Yeah. It's like, well, and then the big drinks companies rushed to pick up craft beers, and then they bought them all and kind of just changed the brands. But Buzzballs is a thing now. So I know, I agree, Karen. I think this is something we can both agree on.
It looks like something for the bathtub, some sort of packaged soap.
What, you mean like from Lush or something?
Exactly.
Where it just,
a bath bomb.
Apparently we've got about 8 CEOs waiting in the wings, so I better be careful. But all I'm saying is that, once again, there is a thing going on with young drinkers, which, dare I say it, Diageo and other the big drinks makers are not on the curve.
There's been a ton of food and beverage innovation over the years, and that is what has moved the needle on the earnings for the sector. And let's take a look at what we're seeing from the US markets, and the finish was positive. We saw records again, back-to-back for the S&P and the NASDAQ, back to that record territory after taking a breather amid developments in the Middle East, but very strong, some of this thanks to the technology stocks. I mentioned earlier in the show that the ETF containing some of the semiconductors popped more than 3%. You saw concentration around some of those assets. In terms of the Asian markets, we're still ex-Japan in terms of trading activity. The Hong Kong market is slightly firmer today. Stronger ranges out of the Chinese stock market, up 1.2%. We did see that China's services activity expanded at its fastest pace in April. Some of this down to growth in new business. KOSPI is stronger along with the Australian market. Now, European futures, as we gear up for the trading session today, this is how we're looking. We are chasing green and very strong ranges actually on the 50 futures. Big earnings days, so it may move the needle on some of these stocks. FTSE futures seen high, was down 1.4% yesterday in that catch-up phase that we saw after bank holiday, where the market reacted to Project Freedom. 1.4 down it was, so we're looking to recapture a lot of that lost territory first up out of the gates on the FTSE bin.
Still to come on the show, Novo Nordisk raises its full-year outlook. We will be live in Copenhagen. Plus, Infineon ups its full-year outlook with the chip maker seeing tailwinds from, the AI boom. We'll bring you Anetta's interview with the CEO. And we'll talk earnings with the CEO of Philips right after the break. Don't go away.
Executive Decisions is the new podcast from CNBC, where I ask powerful leaders about their decisions that changed everything. I'm Steve Sedgwick. Here's Miss Jo Malone, CBE.
I started that first business of skincare. That's when I knew that I was in charge of my own life. And that's when the entrepreneur really, although I didn't know what the word entrepreneur meant, that's when the entrepreneur really took hold.
That's Executive Decisions with me, Steve Sedgwick. Get it wherever you're listening to this. Welcome back. Philips reported a 4% rise in first quarter sales, with the company keeping its full-year outlook for sales growth. The Dutch healthcare group says it's seen high growth in order intake, boosted by demand in North America. Let's get to Roy Jacobs, the CEO of Philips. Roy, lovely to see you. Tell us about the numbers. Give us the broad brush answer to what is going on at the moment, given these ridiculous numbers of challenges you're facing.
Yeah, for Philips, it was a strong start of the year. We had good order intake with 6%, sales growth of 4%, and we increased our margins with 40 bips, despite additionally tariff impact and as well the cost inflation that now starts to hit as a result of the geopolitical turmoil that we're living in. So a strong start that also, combined with the additional actions we are taking to offset some of these challenges, have given us the confidence to come out with a reiteration of our full year guidance so that we are on track to hit that as well.
Roy, I mentioned North America in the read into you as well. And President Trump obviously got his Supreme Court ruling in February, which went against him, leaving open the question of rebates on tariffs. And you've mentioned tariffs in your results announcement. What do you do? Because he said, I will remember people who ask for the rebate. You asking for the rebate?
So we are focusing on mitigating the tariffs. That's what we have been doing by localizing in North America. And actually North America demand, as you have seen, is very strong. And actually we are really serving the market well, both actually in the consumer side, where we've been expanding our retail footprint, but also on the health system side. Then we are mitigating tariffs with offsetting cost measures. So the productivity, we had 126 million in the quarter that we delivered, that helped us to grow our margins despite the tariffs. And we also see the tariffs, or at least the execution of it, as a trend that we will have to kind of support, which means localization in the biggest markets that you serve, whether that's China, whether that's North America. We need to be able to actually be close to that market. We cannot do that in every market, but for sure the North American market, being the biggest healthcare market of the world, has to be served really well, and that's also what we are going after.
Mr. Jacobs, you are a great friend of this channel, and I've enjoyed many interviews with you, but you didn't answer my question. Are you asked? It was a brilliant answer. It was almost a filibuster of an answer, but you didn't answer it, Roy. Are you asking for your rebate from the tariffs?
Of course, we will also ask for rebate of tariffs in line with the government policies, because if the policy is that they will give it back, of course we want it back. But we are not looking at just this incident. We are looking through the economy and where it's heading. And what we see just as a more general trend, and that's actually happening after COVID, is that certain countries want to be more self-sufficient. They want to kind of be having their own production of critical products like medical services closer to their home base. That's also what the US is doing. I said already earlier, China has been doing that already a bit longer. So that's something that we keep on providing the logistics infrastructure for. We have been investing in that, and that's also where we see that we are continuing to set up very well to succeed in a very strong North American market for us.
Roy, it's Karen jumping in. Good morning to you. I think the Europeans call that strategic autonomy. But there is a meeting that is set for the 14th to 15th between Trump and President Xi. The market is looking at whether that could lead to any improved relations between the US and China. And given the huge trade flows that you look at between those two nations for your company, would there be any upside if relationships were a little bit warmer between the two countries?
So for us, both North America and China are important. So, and also when we look at the world, we have been saying of course, we prefer a world without tariffs, without trade barriers, because we want to serve patients well. That's where we innovate for. That's also what we have been putting out. And we're also showing in this first quarter that we are able to do so despite the turmoil that we're living. So I really would hope that this is going to be a productive meeting that I think will serve the world, will also serve healthcare patients, but also consumers, and will help us to do better business. At the same time, I think what we see as the underlying demand in healthcare, it remains strong. The challenges are not going away. There is still very much pressure on staff. Burnouts are there. Patient volume is growing. So actually that's where we see the order growth coming in. We have been launching really exciting innovations also now with the help of AI. We had a smart heart innovation, for example, where in MRI imaging, with now reducing it from 40 to 1 click, you can scan faster and more accurately. Now that's exactly what actually we want AI to do for patients. So there's a lot happening that we are dialing up on that actually helps us to serve in this very turbulent world our customers and consumers in the right way.
Certainly something we're watching in terms of the innovation, Roy. But when it comes to the high cost inflation story, and we know the Middle East is contributing to that, adding to supply chain issues too for a lot of companies in various different areas, even when it comes to high-end technology. What are you witnessing in terms of those disruptions and how it's impacting the business?
Yeah, I think we need to be eyes wide open that inflationary pressures will be there. So that's where actually our productivity program that we already had in place is so important. We deliver 126 million in the quarter. We also, over the last few years, have been showing that we have really good cost discipline to deal with adversity, because this is, of course, not the first turbulent period. We expect more of that, and that's why we're dialing up productivity actions to also counter that. That allows us to reiterate the full year guidance. So we expect prices to go up in terms of energy, plastics, some components. We are working that through with our own cost measures. We will do selective pricing also to counter that in the market. So that's where kind of we came out with coming with a full year guidance on both growth and margin that we stick by as we announced it in February.
Roy, it's been well reported that the strikes on the Ras Laffan facility, the gas hub by Iran, has disrupted helium supplies. Really interested in what you're doing in this space as a company, developing helium-free MRI technology. Just explain how far advanced that is. Is it out in hospitals and healthcare centres yet? And do you foresee a time where maybe MRI could do away without using helium at all?
Yeah, I think it's an excellent question. We are driving towards an industry of MRI imaging without helium. We have introduced the first helium-free solution already years ago. We have more than 2,000 systems out there, and they're proven to be just much more resilient. Not only in a situation like this where you cannot even get helium, but also, for example, when we saw the energy outage in Spain and Portugal, and you need to get the MRI systems back up, it goes much faster if you have helium-free MRI technology. So we have been introducing this in a 1.5D. We also have a next generation coming already next year. We are the outright leader in this space. We also see demand kind of rising in this, and it's really critical because 1/3 of global helium is used in the medical imaging industry. And with 20% of capacity down and the need for diagnosis only going up, we need to provide a solution. And a helium-free kind of MRI imaging is a solution that we have available, is out there, and that's being installed as we speak in many customers to counter some of these challenges that they are facing.
Roy, thank you very much for joining us today on what is a busy earnings day. Roy Jakobs with us, the CEO of Philips. Let's bounce to the German chip maker, Infineon, which has raised its full-year outlook, with the group's CEO citing the AI boom, while adding that demand for its power supply solutions in data centres remains very high. Infineon, though, stock has seen down more than 4% in early Frankfurt trade on the back of the results. So let's get out to Annette for more. Annette, I was just glancing through the numbers. It seems as though they came in bang on expectations in a lot of the aspects, revenue, for instance, but was it just simply the fact that they haven't beaten, that market expectations are running so high around AI?
Yeah, it's probably the case. That's why the shares we're currently seeing pre-market trading a lot lower than expected in a way, because the results for the last quarter were more or less bang in line. And of course, it's a positive that they are lifting their guidance for the full year. And for their normally really conservative take on their outlook, they're really optimistic, saying they're seeing substantial growth for the remainder of the year. So I guess it's also down to the fact that the shares are one of the biggest winners among DAX companies here in Germany. The shares are up by roughly 60% year to date on, of course, that big AI boom. And that's what the company is as well saying. AI and demand adjacent to AI is actually the single biggest revenue driver in the history of Infineon. Having said that, the other big segment, the automotive, is as well recovering. And here's what the CFO told us this morning.
We have even increased our number one position in the automotive microcontrollers recently and are now at 36% global market share, even increasing the gap to number two. So this is very good also from a strategic standpoint. Now, more to the short-term question you're raising, Annette, there is, of course, a muted picture. The number of cars being produced is not going up. S&P has recently even revised adjusted downwards slightly, and they are now more in line with what we had in our original guidance when it comes to the numbers of car. But the content per car, and here we are back to the story of, for example, software-defined vehicles supported by our acquisition of the Marvell Ethernet business last year. That is a business where we see strong traction. We see some order intake increasing, and the only area where we see a muted picture is what we call within the electromobility, the high voltage business for inverters. Here we see a very, very competitive environment, and we need to refocus that business, but that is already included in all the numbers.
Of course, I also had to ask him about scarcities on the horizon, especially commodities. And they're currently saying that they don't see, at least for their business, a problem with helium because they do multi-source that and they can actually circumvent the Middle East. But what they're saying is that prices are on the rise, of course, for commodities, but for now, they can also increase their prices to their end customers, especially when it comes to a data center demand. And what they're also seeing that their customers are actually stocking up. So for Infineon, the demand picture seems to be more than all right for the remainder of the year. And that's also why they're hiking the guidance for the quarters to come. And as I said before, normally they're very conservative when it comes to the outlook. And this time around, they seem to be quite bullish on that year. Of course, also always provided, that's what they're also saying, that we don't see a further escalation of geopolitical tension. It's probably what they have in mind is Taiwan.